Hello Internet, welcome to Making Money. My name's Eric and this is your Daily Dollar, our financial segment where I give you one lesson every day to help you reach your financial goals. So we've been talking about investments a lot lately. And the other day we did a video on 12 different types of investments that you as an investor can get into right now and start making money. Today, we are breaking down one of those aspects a little further. Yesterday, we went over bonds, what they are, how they work, and how you can make more money on them. Today, we're answering the question, what are annuities? So in our 12 types of investments video, we went over a little bit about annuities, kind of high level. We said that they were a low risk investment. And again, when we talk about risk and investment, it's a sliding scale. When we say something is a low risk investment, it's lower in comparison to some other types of investments. But even in annuities, them being lower risk, there is some variable risk to them. And it depends on how they're set up, how they work, the different types of annuities. But know that even in a lower risk alternative like annuities, there still can be some variable risk. We also talked about how that annuities are actually contracts, and they're really insurance contracts that pay off over time. We also talked about that they're mainly used in retirement because of the payment structure. Annuities are great for retirement because they give you a form of income over time. And when you're lounging on a beach somewhere, not working, that's a big thing. So annuities are great because of that type of payment structure. Today, we're going to talk about the two phases that make up an annuity, and then we're going to give you some examples, some types of annuities. We're also going to latch an annuity onto something you're probably familiar with, just to help you give a frame of reference. And yeah, so let's dive on in. So the first phase of an annuity is accumulation, and it's pretty much what it sounds like. This is when you are saving and growing the money for your annuity. And this can happen over time, and you're really building the cash value of your annuity in the accumulation step, as it sounds. The second step, which we all love, amazing phase, is the distribution phase. And this is where we get paid back. This is called the annuitization, and this is when you're converting your annuity into regular payments. And like I said, it's the payment portion, so it's the fun part. There are, for our cases today, 4 types of annuities that we're going to talk about. And I apologize if this gets a little hard to understand. They do get a bit complicated here. But these 4 types that we're going to talk about today are actually made up of 2 variables. So the first variable that we're talking about is when you get paid. In an annuity, again, we mentioned that it is basically buying into an insurance contract. You can get a lump sum when you get to your distribution stage. If you get a lump sum instead of payments over time, we had mentioned payments over time in our 12 types of investments video, but if you get paid in a lump sum, that's called an immediate payment. So when is immediate? The other is deferred, which is what we had talked about before, small payments over time into the future. That one tends to be a little bit more common than immediate, but immediate is still something that is out there. So there is immediate payment or there is deferred payment. So that's the first variable. The second variable is how you grow your investment, how you grow your annuity. And that can either be done fixed through interest rates. So if you're growing it with interest rates alone, which tends to be a little bit less risk, you'll make a little bit less return because of that, but that is fixed. It's more guaranteed. The other side of that is a variable investment strategy, and that actually you are investing your annuity into the market, and you might get a little bit more return, but again, it is variable. It's got a little bit more risk to it. And again, I mentioned before that this is kind of how an annuity, even though it is low risk, can have some variability risk to it. So you have when you get paid, and that's either immediate or deferred, and then you have how you grow it, and that's either fixed or variable. All right. Now with these, we can mix and match them to make our 4 types. So you can have an immediate fixed. You grew it with interest alone and you get a lump sum. You get immediate variable. You grew it in the market and you get a lump sum. You have deferred fixed. I grew it with interest alone, but I'm going to get payments in the future. And then we have deferred variable. I grew it in the market and then I get payments later. Now each type obviously has a different way that it's, gaining money over time. It's got a different payback strategy to it. And yeah, we talked about those 4 today, but technically there are more than that. And just by what we talked about, you can see how some may have more risk than others, but in general, they tend to be relatively low risk. And again, it is an insurance policy that you're basically buying into, meaning that you will get, some money in the future. And as I mentioned before, we tend to do a deferred payment when we do annuities. Doesn't mean always is, but that guarantees you some supplemental income in the future. Now, I mentioned we'll anchor this to something that you might already know, and that's a 401k. Now, while it isn't always an option and less employees take advantage of it, and not that they necessarily should, but if it's available to you, you can review it, is that in a 401k, sometimes you can actually purchase an annuity. And again, this isn't available to all 401ks, and again, it may not be right for all individuals. Again, I'm not a financial advisor. I'm just giving you the options and giving you a little bit more information as to how these work. But it is something that you could take a look into to see if your employer offers an annuity in your 401k. They tend to be, again, low risk, more or less, but also not as high pay. It is a supplemental income in the future, but it isn't an integral funding source. So while it can definitely be part of a retirement plan, it isn't usually the only part of the retirement and normally part of a portfolio. So something to consider, especially since we will all be there eventually, and something you may have to consider paying in sooner rather than later. I'm interested, are any of you guys currently paying into an annuity? Are you planning on doing this in the future? Have you ever thought about annuities before? Leave that in the comments below. And as always, I hope you guys are really enjoying these. Hopefully this will give you a little bit more information about how these investments work. If you're enjoying this series, feel free to subscribe. You can hit me up on Twitter, link in the description, and I will see you guys tomorrow for another lesson. All right, guys, see ya.